Today is Wednesday, February the 5th, and we're going to take a quick run through this because now we've just got a continuation of trying to forget that there was ever a coronavirus fear and recouping as much of that loss as possible. You can see green pretty much everywhere. Amazon dropped a little bit. Disney, strangely enough. Anyhow, volume is what we've come to expect, huge. I thought the volume in the NASDAQ would be higher because of Tesla. But anyways, we had advancers and decliners, 3-1, just like yesterday. But that's not the full picture. We want to look at the issues traded on the New York Stock Exchange, but we have advances and decliners by about 1,600. Now remember that we needed 1,000 for the oscillator to go back to zero, and we've certainly got more than that. So our oscillator is back over the neutral line, and frankly it looks like it's going back to this previous level, and who knows, it could also go all the way back to the overbought area, and then it's going to pull back. But look at the gains that it's had in just 1, 2, 3 days. That's pretty substantial. The VIX still above the 12 line, which we call the historic low. But these two momentum indicators would signal that long term, the VIX is going higher. So the S&P up 37 points, not surprisingly, to do a double top. And you could say that we closed that gap. It's pretty close to this candle wick and this tail, not entirely. So I'm going to leave the gap in place, but it's less important than it was. But what's more important now is this double top. And what we're going to look for is what Investors Business Daily, IBD, the editor of that is a guy named O'Neill, and he calls this the cup and handle. We've got the cup here, and if we get a handle, which is some sideways motion, that's indicative of a break higher. So let's take a look at the cup and handle. Let's just make a note to ourselves that we want to look for a cup and handle. And let's see if that tells us anything. That's where we're going. Apple was all over the place today, but the key thing again is that Apple has come back to a double top, just like the S&P, which should signal difficulty keeping this level. So I took my stock and I sold the weekly 320 calls for two reasons. One, Friday the stock goes ex-dividend. I sold the 320 calls for where are we? I sold the 320 calls expiring Friday for $2.39. So if the stock ends above 320, the people who want the dividend are going to take my stock, but they're going to leave me with the $2.39. Since the dividend is only 77 cents, I'm quite happy for that trade, and I look for an opportunity to get back into Apple again. But it just means I don't have to wait a week or two for the dividend. I'm going to get the benefit of the 320 call, $2.39 given to me. Now, of course, if the stock ends up Friday higher than $322.39, then I'm going to be out a little bit. Amazon, I closed that position today. It had made $1,400 out of the $1,500, so there's no point in sitting on it for 2 more weeks. We had this pullback. I would love to get back into Amazon again. Caterpillar, Remember, I have no shorts on my Caterpillar stock. We ended up above the 200-day moving average. Now we're looking at resistance on the cloud. But this is quite the move for Caterpillar, so that was a substantial gain today, up almost $4. I have 600 shares, so that was $2,400, and there was nothing deducted from that because I don't have the short calls anymore. Home Depot continuing to crush it. This is significant. Looks like we're going to make this triple top here. 1, 2, 3. We're going to make this triple top tomorrow. Let's just put an alert there. And let's see if we can't hit 238.59 tomorrow. Shopify down $11. That hurt a little bit. My 6 contracts were actually making a few bucks, but 168.1 is where we said it was going to go, and it did, and it pulled back. So much like with Amazon, when I saw Amazon doing something similar, I didn't sell, and it turned out that I was down $400 with Amazon at one point, and it ended up being a $1,400 profit. So I'm willing to hold on to this because this is a place where sellers would camp out. The volume is low, so there's no institutional selling going on. This is still a good thing for me to hold. If it pops up tomorrow, maybe I'll even add to my position. AT&T, Tesla was the big loser today. So Tesla, that gap that was created yesterday, filled, got a support off the 8 EMA. I would create an alert and say that if we can drop below the 8 EMA tomorrow, that it's worth taking out puts in this stock. I'm looking at this 580 value as really where the stock should be. This is all short sellers covering their positions, and I guess they're kicking themselves now. We had a $100 or more gain, $135 range yesterday, and today we had this $183 range. That's just an incredible amount of volatility. Whirlpool, killing it. And it looks like it could be going higher. I'm still not in Whirlpool, but it's still something to take a look at. We haven't looked at Google, but they did have their earnings, and they had this drop. They're starting to recover. Google is still a stock that is going places. There's no question about it. Let's take a look at a weekly chart for Google here. Let's get rid of this Fibonacci because it's no longer important. We had this channel, broke the channel. We have this quasi trend line. We've pulled back below that trend line. Let's get rid of this one. Let's try to put an alert on that trend line when it crosses or when it touches the trend line. Let's give ourselves an alert, and let's look at some March or even April call spreads. What else is happening? We never looked at Goldman Sachs, always a strong stock. We had this Fibonacci that I drew a long time ago. That was resistance. 68.1 was support. Goldman Sachs is a good one to be looking at. I'm going to be thinking more carefully once it gets over 78.2, but the long-term oscillator is at its bottom, meaning that it's coming back up, but its short-term oscillator hasn't finished its retreat. Look at the red, okay? So we want this short-term oscillator to come down to this level. Doesn't mean the stock's going to be at that level, but whatever the stock is at, that's going to be an opportunity to jump into Goldman Sachs. We've never looked at Walmart, or we haven't in quite a long time. If the economy is that good, then Target should be getting the business and not Walmart. Walmart is sort of where people shop when they can't afford to shop anywhere else, in my opinion. So we might come back and revisit Walmart. Where are we going tomorrow? I think we're going sideways. We still haven't come back to the cloud for that test. So let's watch for a cup and handle. And if we get a handle forming, then we should start buying SPY calls for the future. But the market is just, there's really no good reason why it's up here. Earnings in the last quarter were not that great. They were good. They weren't great. You still had underperformers like Exxon and Ford and Boeing. I'm just not sure. Talk to you tomorrow.